Hey everyone, let's look into this 1 hour Aussie US dollar chart that was recently on my radar. Now, what really makes this whole price movement a valuable setup, in my opinion, is not just its high probability aspect, but also, as I will explain later, is also how readable it is. And as you already know, a high probability in trading is all about spotting trade setups that tilt the odds in favor of making green more times than not. In this case, it seems that everything, including chart patterns, indicators, and trend shifts, all seem to align perfectly, indicating a higher chance of a profitable entry. In simple terms, with this type of setup, it's like everything is pointing towards a green light, signaling that it could be a good time to make a move. Now, stumbling upon such a gem of a play, I would say, isn't an everyday thing. So when you do spot one, grab it, but don't forget to play it safe too. Remember, guys, that we are here to win the game show, not lose our shirts. So risk management should always play a big part in your trading strategy. Now, looking at the chart, you'll notice that after we swept the lows down here, the currency pair did a U-turn and began moving upwards before spiking, consolidating, and then finally breaking out. It should be noted that after the supply started drying up on the downside, we have this sudden spike take place, which is clearly a typical price action pattern that happens when markets react quickly at price levels where supply and demand are most unbalanced. The more lopsided these two forces get, the stronger and quicker the market's reaction will be. In this case, as you can see from the chart, it's ripping upwards. Also, if we take a closer look, we'll see that after the price punched through the res level of this sideways channel, the resulting breakout became consequential, meaning that this stair-stepping pattern where a lot of liquidity got scooped up as shorts kept getting squeezed out. So this stair-stepping action culminated in the formation of a stop hunt zone. For those of you new to day trading, a breakout is when the price of a security, such as a stock or a cryptocurrency, moves above resistance or below support on increased volume. This means that the price is moving out of its normal range and might continue to move in the same direction, indicating a possible buying or shorting opportunity. On the other hand, a stop hunt zone is a price level where many traders have set their stop loss orders. These are basically instructions to sell a security when it reaches a certain price. It's called a stop hunt because large institutional players or market makers intentionally push the price to this level to trigger these stop loss orders, often resulting in a sharp price movement. Keep in mind, guys, that these are smart money traps designed to rinse, retail, and conceal the future direction of the market. So returning to the chart analysis, it's important to note that stop hunting often occurs near the lows of a downtrend or the highs of an uptrend. In this case, it signals that we have hit the top of this range. This is why I mentioned at the start of this video that this setup is a valuable find due to its readability factor. It began with an easily identifiable temporary bottom, which was subsequently followed by a strong demand surge, suggesting that perhaps the goal of smart money was to direct prices higher. This was validated by the ensuing breakout and the subsequent stair-stepping pattern progression. Following this, the stop hunting element came into the picture, indicating that we have reached the range's top here. Obviously, this implies that the market is letting us know its bias, which in this case is clearly bearish. This seamless link between this temporary bottom, the just mentioned price action patterns, the formation of the stop hand zone resulting in the subsequent identification of the range's stop further emphasizes the importance of this smart money reversal, which is a level that usually offers strong selling. In fact, before these lower highs got printed up here, the price, as you can see from the chart, was notably extended. The trend was gaining momentum and the range was broadening. The consideration of these factors when analyzing a range for a possible reversal is important. Interestingly, this was validated following this break in market formation. This technical pattern could suggest an impending shift in market sentiment, paving the way for new trading opportunities. Identifying an area of interest and then an entry point amid such a shift can prove invaluable in my view due to the higher probability conditions it represents. However, as I've always stressed in my videos, you should never enter a trade without a confluence of factors that confirm an entry point. In this particular case, the pair's retracement into this imbalance zone, let alone the formation of a subsequent double top, created, in my opinion, the perfect setup or conditions for a high probability short entry within this hypothetical area of interest. Obviously, all this move from the initial double top zone, which is a level that should offer logically some degree of selling, or at least a short-term price resistance. So this entire trajectory stretching from the double top down to this support level should ideally mark your first profit target. Also, check out these nice flashes here, a clear signal that bears are stepping in, overpowering the buy side and confirming the start of a bearish reversal. As far as the second profit target goes, following the resolution of this redistribution segment, and by the way, notice how price kept trading sideways here clearly without having the kind of fuel that would propel it above this resistance level. So as I was saying, following the resolution of this redistribution segment, your second target ought to be set at the retest of this support level. There is a high probability that the price will gravitate towards these levels, as this would symbolize, in my view, the completion of a trading cycle. Obviously, trading cycles, especially the Wyckoff cycle, plays a significant role for price action traders. Essentially, and this is just my opinion, but I think it provides a viable framework that allows for a better understanding and prediction of market bias. I'm sure that once you grasp this concept, everything will become clearer. And speaking of concepts, this next video will help you with an additional approach for executing cycle-based trades. Alright gang, that should do it for today. Thanks for watching, and as always, hope to catch you all in the next one.